All right. We had some technical difficulties because what I am about to do today, I've never done before. I've never had actually somebody join me on these live videos. So today, this is what I'm going to do. This is the format. As you are joining this live video about all things market in the Asheville area, real estate market, that is, please introduce yourself and just say where you joining from. I mean, you don't have to introduce yourself, but say where you joining from. State, country, town, part of town. Just say hi and tell us where you joining from. This stream will be recorded, so if you miss the first part or whatever, or if you need to go, it's going to be recorded and it's going to live on my channel, so you can come back to it and you can rewatch it. Post your questions in the comment section and we will answer them as the best we can. And I see here Alexi is joining from Asheville. Thank you for doing that, for joining. All right. So today we're going to talk about what the market is doing in Asheville, North Carolina. A lot of people who are reaching out to my team and I have different ideas what's going to happen, what's happening in the market. Just because we had a slow year last year, some people think that or want to wait until the market actually goes down, the prices, if not crash, gonna go down, and there's still people who are waiting for the prices to go down, specifically in the Asheville area. Whether or not it's true, I don't have a crystal ball, but we can rely on data. And today I am having Zach Ruiz, who is on our team, but he's not somebody who you would meet when you're buying a house or when you're looking to buy a house in the Asheville area. You know how I always say my team and I, well, Zach is on our team, but he's behind the scenes guy. He is the guru behind all the numbers, behind all the analytics. He knows ins and outs about all kinds of every number that there is when it comes to market reports, as well as other bunch of other stuff that I have no, like, I can't even begin to describe. So he will be the best person to start us. And if you have any questions, like I said, put them in the comments and we will answer them the best we can. So the biggest question a lot of people have is the market going to tank? And when is it going to tank so that everyone can jump on and buy all those cheap houses in foreclosures? Thank you, Zach, for joining and spending a few minutes with us.
Yeah.
So
Thanks for having me.
let's dive in. What's happening?
What is happening? So I guess I'm the fall guy for the data today. So let's do it. Let me know when it's presenting, and I'll do the full screen trick.
Yes, I can. I'm ready.
All right, cool. So
Ooh.
today we're gonna get rid of the infinite mirror. Hopefully, is it gone yet, or is it still there? All right, we're gonna try this one more time.
And somebody saying simple move out of Asheville. You're ridiculous. The market I moved this week is too expensive. Yep, I do not disagree. The prices that I'm seeing, even in this market, even in this slow market, kind of crazy. Yep,
Well,
you're right.
stay tuned in, Severino. All right, so let's try it again.
All right, I'm ready. Okay,
Right.
here you go.
I tried to be fancy. All right, so we're gonna go over what's called the Ruiz report. What's going on, Tony from Austin? Huge echo, not ideal. How do I deal with that? Let's see. Audio.
Is it on Zach's part or when me?
Did that work?
Is it better? Somebody say something.
Tony from Austin, we're counting on you, man. Although I do hear an echo.
Just Zach.
Just
Still.
Let's see. Let me click buttons. I do hear that.
Still echo. little
Elena,
better.
if you go to settings and audio, there's an echo cancellation.
Audio. Yep. Let's try that. Okay.
All right, how about now?
Is it better? Anybody?
All right, sounds better on my end. All right, we're gonna keep on keeping on. Nice, thanks, Lexi. So we've been running this report about 48 months. It turns out the first month ever was the first month of COVID. And so real estate wasn't an essential service. You weren't even allowed to go and show a home. So that is the beginning, the demarcation point for the Ruiz report. We've been tracking the numbers ever since. It's 10 slides. And so you can get it all for free. We'll get to that at the end. But so basically we have our mission's twofold, right? So the Ruiz report, like I said, is 10 slides and it's data-driven market insights. It's directly from the MLS. It's not like an opinion. It's what happened based on the on-market properties. And then it's to empower you to be that local economist of choice, right? Through these types of training. And so the first time we go over the reports, we talk about graphs. And so as I like to say, pretty shapes and colors. If you've heard me talk at all, I always say that because most people's eyes glaze over when they see graphs, but I promise it's super easy. So you'll notice on the far right of every graph, you'll see a little box around, if you can see my mouse, you'll see a box around the month, and that's the report month. And then you'll see a red box to the left, and that's the same month last year. So in between, you've got year over year. Then you'll notice there's 2 months leading in. And so that gives you some seasonality, right? So 2 months for seasonality. So what was happening this time last year in the market? And then looking to the right is that fuzzy crystal ball, what might happen seasonally this year, right? And every graph follows that pattern. So as long as you've got that, you are good to go. So the first slide that we're going to go over is volume and activity. And all we're looking at here is the height of the bar. So the red bar is the total active listings. We look at the MLS every single day, and every time a listing goes active, whether it was under contract and bounced back on, or it was just listed, we count that. And that's the total active listings at any point in time throughout the month. Then the green are the homes that sold. And that means they closed in February. That's what we're doing. It comes out the month after. And so they closed in February, but they probably went under contract in a previous month. We'll be diving into that in a little bit. And then the homes that went under contract in that month. And so the homes that closed, went under contract, and went live is essentially all of the real estate that happened. So all we're looking at here is the height of the bar. And so the height of the bar, if you look to the left, sorry, I got to move my mouse, from screen to screen. The left February, right, was lower than this right February. And that's all that's happening, right? So if we look at the red bar, the total active listings, it looks like there were more, or oh, look at that. The number of active listings decreased by 5% month over month, and total active listings were up 20% compared to this time last year. So supply and demand is what we're going to hit on a bunch. A lot more people thought it was a good idea to list their home this February, potentially, right? And into that, this is where we're going to dive in a little bit, is listings and pendings. And this is where it comes out. And so the red bar are the new listings. Those are the homes that went on the market in this month. And the green line is the homes that went under contract. So it's what took off. And so this slide tells the story of supply and demand. This is my favorite slide in the entire presentation. So the way we interpret this graph is when the red bar is above the green line, then that means we are adding more homes than we're taking off, right? So the yellow there that I've highlighted in this is the homes that were added, that supply increased above what was taken off. But then when the red bar is below, then that means we took more off than we added. And so that area under the curve, that yellow gap, is what supply was reduced by. So this is supply and demand. So if we look at our graph here, we'll notice that we've been consistently adding more supply to the market than we've been taking off. We are adding demand. And if you were to zoom out all 48 months that this has been happening, this is the first sustained period since the pandemic where we've added more homes than we've taken off in our area in Asheville. So we've been consistently adding supply and jump in at any point in time.
Anybody has any guesses why? Put it in the comments why there were more houses for sale for this past year, few months, than buyers. Like, what happened? Put it in the comments. Your guesses.
Your guesses should be influenced by interest rates, inflation, the election, all sorts of things are happening. It's an interesting year.
You said it. Interesting.
And curious things are starting to happen now that we have more supply than we've had in some time. So this graph is about home prices. The red line is the average price. Mortgage rates, Tony, definitely a thing. So the average price is if you took all the homes that sold, added up the total amount of everything that's sold and divided it by how many, then that's your average. And you'll notice that the average is above the median because that means that really expensive homes are pulling up the average. And that's described here at this bottom right point. The median is if you lined up all the homes from the least expensive to the most expensive and just grabbed the middle one. And so that number represents the middle, which is essentially saying 50% of homes that sold in Buncombe County in February were worth at least basically $430,000. 50% of the homes are hovering around there. So they're more or less, right? And the average is 527. So I have to have a pro tip there that talks about not focusing on monthly fluctuations. Monthly fluctuations can be anything. I'm pretty sure one of the most expensive homes in Buncombe County's history sold in November. And so that pulls up the average price, right? So don't look at month over month unless you're flipping, then that definitely has something to do with you. But generally, you want to look at longer periods of time. And so if we zoom out and we just add a trend line, which is like a best fit line, like what's the average closest point to this line along the graph, you'll notice that it's up and to the right, but it's certainly not the hockey stick that it once was, right? The slope of that line, how much it's increasing is definitely tapering off. It's not, things are not increasing as quickly. But if you look from about June, it looks like prices have kind of consistently been taking a hit in the Buncombe County area. But what's really interesting is for the first time since I've been running this report in 48 months, both the average and the median prices are down year over year. That has not happened. That has not happened since I've been running this report. So that was the biggest takeaway from February, that for the first time, the year over year price change was a negative one other than a positive one. And so all that's saying is if in this imaginary world where you bought one house and sold it 1 year later, you may be a little bit under, but most people have owned their homes for much longer than 1 year. So you have to put everything into perspective, right? What's going on here? So another curious thing is DOM, right? Days on market. So you've basically got two levers or one lever, and there's different ways that it goes, right? So your price is high or low and you sell quickly or not. And so days on market has been going up, right? So it came down month over month. And that's when the market kind of like makes these decisions. And you'll see that the price has gone down accordingly because most homes in any given price range, at least in Asheville, once they've been on for enough, is part of this seasonal. We will get into that, right? But so let's go back really quick. You see the price last year. So let's go seasonal, right? It was going up. Spring has sprung, essentially, is what was happening. And if we look to the left, there was that steady increase as well. We're not seeing that, right? So what we'll only know seasonally come forward. But if we're looking at, like I was saying, so let's look at December of I'm sorry, my mouse is on the wrong screen. So let's look at December and January of this year, right? December and January of this year are going down and to the right. But December and January of last year, we have an upward slope, right? So it may be seasonal, but it's not repeating what happened previously. So during that same period, right, as prices were kind of coming down and getting sticky, you saw that the days on market was going up because the sellers were basically like, I'm holding out, right? And so that made them stay on the market longer. And we're gonna talk about that in a second here. But you'll notice that month over month, when the prices came down, we now have that 1 year over year thing, that there was a noticeable drop in days on market. So did sellers and their agents get the message? That's kind of what's happening here, potentially. I don't know, right? But real time. So I give this presentation every month at a little something called AVL Meetup. We're gonna do this live basically though. So there's another site, remc.co. So if you look at, we're looking here at residential real estate in Buncombe County, right? Not new construction or condos or townhomes, just what you think of as a home overall, between 500 and 600, which puts us in that average price range. And as of the 5th of the month, the median days on market was 68, but we're going to look live and direct, right? So this is remc.co. So we're looking between $500,000 and $600,000. And what we're seeing is that the median days on market for all active listings is 49 days, right? And if we look at price reductions, if we sort by days on market, look, the homes that are selling fastest are not having a price reduction. They are pricing correctly. Look at this, right? Does this report reflect if someone took their home off the market and then put it back on the market? Technically, yes. Technically, that home that was taken off and put back on would be counted. Yes, absolutely. And the MLS has its own rules that if they took it off and put it back on within a certain period, that those numbers wouldn't reset, like days on market, for example, it would not reset. Maybe Elena knows the exact number. I don't want to put you on the spot, but I think it's like 3 months or something.
I think it's 90 days. Yeah.
Yeah. Right. So what we're looking at is the median days on market. So another way to say this, we'll go to my slides here in a second, is that 50% of the homes that haven't sold yet have been on the market for at least 49 days. That's what we're talking about here. 41% of them, right, close to half basically, have had to have a price reduction. The average price reduction is 45 grand, because as we're going by days on market here, right? As it starts to tick up, you'll see the price change. People are having to, really make drastic differences here. We're looking at the $100,000 for this listing, right? So that's what's going on here. Now over here, the median days on market for homes that are under contract. That means right now they're under contract. They came to an agreement with a potential buyer. And so those homes, 50% of those homes went under contract in 22 days or less. And again, if we sort by days on market, you'll notice that there's no price change for the ones. Sorry, I misspoke earlier. The actives with no price changes may be stubborn. You never know. But the days on market with the under contract rather, with low days on market, they didn't need a price range. They were priced correctly from the get. And then the ones that went under contract faster made noticeable price ranges. So this is a $20,000, $40,000, $19,000. They're not doing like $1 to get an MLS bump. They're doing something to attract a buyer. And so the way to look at this is 50% of the homes that are under contract that, hopefully will close, came to an agreement in 22 days or less. So we'll come back here and tie it all in. So 50% of the active homes, we went there, right? It was 68 days at the beginning of the month. So that's already come down a lot, right? So the market is working. Is the market tanking? No, because last month it was 93. We just showed it at 68, and then under contract, we have now 22. So we're watching it come down right now. So the market's not tanking. The market's doing its thing. Right. So did sellers get the message? I don't know, but it looks like it. It certainly looks like it. So the market does very much seem to be correcting itself. So this is a lot of information, and I kind of went over it fast. And if you've never done it before, it might have been a lot. So I just wanted to show you really quick. If you go to the ruizreport.com, and you hit latest reports at the top there, you can pick your favorite county and you could read any report and it'll break it down, right? So I'll give you the explanations, how to do all that and everything. But even better, if you go to sign up for an account, right? We have a free student account here where you can get all those training videos for free. So every slide has like a 5-minute video that explains how it goes together with everything. And you will absolutely be the local economist of choice. Unless you're agents, Elena, you'll probably know more about the market than them. So with that, I'll stop sharing. And if anyone has any questions, happy to dive in here. I don't know how to stop sharing. There you go.
I can do it. Thank you, Zach. Yes, I was going to say in the beginning, he talks fast and tries to jam a lot of information in a very short presentation. So jam-packed with all kinds of information. So the market isn't tanking, but is slowly going down.
So this is a fun conversation. So a fun thing I like to say is that the list price doesn't matter. Nobody agreed to a list price. So all these prices coming down from the list price doesn't really matter, right? But now we're seeing close prices, to your point, kind of coming down. So you might think that we've hit some sort of inflection point, right? Where we go from up to down. Clearly we're there. Now, are we going to continue to go down? Now, my personal opinion for many reasons, I'll tell you a couple of them right now, is no. I don't think so, right? Here's a bunch of them. For the Asheville reasons specifically, more people want to be here. Just demand exceeds supply. Second, maybe you find yourself in this situation. I know I do. Most people, I think it's something like 80% of all outstanding mortgages are below 4% right now, right? So do your own research. I can't remember the exact stat, but it's not far from that. And so since prices have gone up since that person bought the home, not only is the next house more expensive sticker price, it's significantly more expensive debt to income ratio wise, which is how most people afford a home if you're not getting a mortgage loan. So your monthly payment's going to go up for a lower quality home potentially, or at least a lateral move. So I think that supply is going to be, it's going to remain low for some time because people have these golden handcuffs of incredible mortgage rates. No one wants to give up a $1,600 mortgage to get a $2,600 mortgage for almost the same house. So they have the 5 Ds. I don't know what they all stand for, but it's like divorces, diamonds, diplomas. Like short of your life forcing you to sell, I think supply is going to be constrained. And back to supply and demand, I think there's more demand than supply. I think there's like a 12-year overall U.S. housing shortage. We're behind to keep up with supply by something like 12 years. Again, don't quote me exactly, but it's a number that's not getting closed anytime soon. So I don't think prices are, if prices start tanking, I think it's because we have more going on. And instead of real estate being the leading indicator like last time, it'll be one of the indicators. Because last time the loans were based on people self-reporting income. Presumably this time those loans are sound and people actually can afford them. So unless something happens on their income side where they can't afford that payment anymore, the houses seem to be collateralized properly.
Right. And, I think this past year, 2023, and going into 2024 with such high interest rates, that is not helping the market to go up, to move up. Like Zach said, people who, on one hand, sellers do not want to sell because they do not want to give up those very comfortable 2, 3, 4% interest rates that they're sitting on to jump into 8%, 7%. And that if you qualify, you still need to qualify for those high interest rates.
So if I can, there you go. That's what I was going to do. So if I can share my screen, or if you can share it.
Mm-hmm. So for $500,000 homes on average, are they closing at higher than asking or lower? Let's see.
All right. So one of the slides in the actual report, so if like a realtor like Elena were to provide this to you, we could look at 500 to 599. That's a $100,000 gap there, right? So that $500,000 price range. And this column here is average list to sale. And now that's a funny number. That's another number I like to talk about, but we're on a condensed version of the report. So the list to sale ratio is the price that it closed at versus the price it was listed at when the offer was made, which is not the original list to sale. That home might have been listed for $1 million and came down $400,000. But if it closed at $500,000 after that price reduction, then its average list to sale would be 100%. The original list to sale is different. A deeper conversation for another day. But the answer is they're basically selling on par. And if you look at this average list to sale column here, per price range, they're all pretty close, right? So the lowest price range is coming down on average 7%. But if you look for the homes that sold, that's only for 10 homes. So you have to think of your sample size as well. Great question.
Did that answer the question, Tony? So, and $500,000, that's your median average sales price. Typically, those are the houses that go faster, and anything, of course, lower than that will go faster. Of course, they need to be positioned correctly, meaning they need to be priced correctly. And like Zach said, looks like most of the sellers who are willing to sell in this market and the agents did come to terms that we're not chasing the market up anymore. We're chasing the market. I mean, we need to be really sensitive to the market and price correctly, so not to have those long days on the market. But anything, within median or average sales price and below will go faster. Again, it needs to be priced correctly. Any other questions?
If you were to turn the market back 2 years or whatever it is, right? As the seller, all these homes are selling for above asking. And what I'm watching on my phone, so I can't, no worries, Tony. So if you were to turn the clock back 2 years, the sellers would be selling, or the homes would be selling at over 100% list to sale, which meant during the offer process, they were leaving money on the table. The house was priced incorrectly, and so it ended up, the market valued it at over 100% of its list price, right? So in that market, as a seller, it is your obligation to not leave money on the table and to push the envelope. So now we're kind of, at least in this moment in time, facing the opposite, where it's going down. So now as a seller, it's your responsibility to get every marginal dollar, every last dollar possible, not leaving any money on the table. So these prices are stickier, especially because if I could share my screen again, I would. But the point is, oh, I even stopped. We'll show for, sorry, Tony, if you get to watch it later, you'll get to see what's going on. But so there is a column down the middle, and this is months of inventory. All right. So if we zoom in, I'm not even going to try, but at the right there, months of inventory is defined. And just think, the way I look at it or think about it all the time is just look at when you open your fridge, right? You go, how many days of food do I have left? If I keep eating the way I'm eating now, when do I need to go to the grocery store and get more food, right? And that's your inventory of food in your fridge. The market's the exact same thing. Months of inventory is if we don't add any homes, but homes continue selling at the rate that they're selling, how many months of inventory is left until there's nothing, right? So 5 to 7 is neutral. Let's call it 6. Above that is a buyer's market. There's a lot of homes. And so the buyer will come and be like, well, if you don't want to sell it, maybe your neighbor will. And so the buyers have more negotiating power. But below 6, below 5 is a seller's market, right? If we look at these price ranges, right? So let's go back to your 500 to 600. We have less than 2 months, one month and 3 weeks essentially of inventory. That is an extremely strong seller's market. The sellers still hold all of the power inventory wise. Now that ratio, if we were to go, here's all the math, right? This is the hardest math there is. You count how many active listings there are, and then you divide by the 12-month pending home average. So what's the average of homes under contract over the past 12 months? So this metric is going to lag a little bit because it's based on the last year of homes going under contract. But essentially, it's still a very, very strong. Is there an increase in new builds, or is it mainly existing stock? There's another incredible question. So I'm going to stop my screen share. So like if you were to think of this as like a stock market thing, like you have your primary market, your IPOs and everything, and then your secondary market, your resales. So the resale market is very, very strong. In Asheville, there's a tremendous amount of inventory coming online with multifamily apartment units and everything like that. But as far as individual lots, we're landlocked. We have mountains in the way and city councils and all sorts of fun things that make it difficult to build. So while there is a tremendous amount of building going on, in fact, my day job, that's kind of what I do. I help a company grow their presence to build more, honestly. And so, but the vast majority of homes being sold, at least in this area, are homes being resold, existing inventory going back on the market.
Mm-hmm. Yes, unlike some other markets, in Florida, Arizona, anywhere, I'm looking at my colleagues in other states where they have these huge developments that are being built, all at once, hundreds of homes.
Right.
It's impossible here. In this area, it's impossible simply because we do not have land. We do not have that much flat land to build on, to build not just to build, but to build economically, so that it will be a house, not $800,000 house or $1 million+ house, but it will be $350,000, $400,000, up to $500,000 house. We do not have that much land. So unfortunately, because of that, we don't have new construction. It's difficult to develop land, and we have all these obstacles, like Zach said, among others, like Asheville, the city of Asheville. And so that's where the supply and demand, and we still have so many people moving to the market. Is there a good market for multifamily? You're talking about buying multifamily. Well, again, a lot of bureaucracy happening on the city level. We don't have a lot of multifamily, honestly. Try to find a duplex. There'll be like 2.5 duplexes in the whole area. Seriously. So unlike, again, other areas, other parts of the country, even the state, we don't have all that, unfortunately. Eventually there will be no land left. Exactly. And that's why Asheville is spreading out. You can only fit so much into Asheville itself, or even Buncombe County. You see other, there's overflow. so to speak, into other counties. Other counties started to grow, like Marshall, Mars Hill, Burnsville, Henderson County. So people start looking elsewhere. Canton, now that Canton is, that's a really up and coming area. Building multifamily. There's a ton of apartments being built right now. Zach, do you know more about that?
Well, I guess it's how do you define multifamily, right? So like multifamily and residential real estate's 4 units or less. In the city of Asheville, it's 3 or less, and then it's in commercial. But if you're talking about commercial multifamily, that is, I wouldn't say that's the future, but certainly that's where most of the money is going nationally right now. They're building, like Elena was saying, it's hard to get 300 tracts of land, but 300, units in a building
go up and
exactly. So I my personal take, 3 stories, 150 units. Yeah. So now you're in the commercial space, right? That is not a residential multifamily. And that's when you get into like, just, are there values of old homes that need renovation? All right. So just to quickly end the commercial multifamily thing, right? You get into just like basically private equity and math, right? How much money did it take us to build? What do we expect our turnover rate and our occupancy rate to be? Does that basically do our debt service? Does it make us money? Does it work? You're in business and math at this point. In residential real estate, it's more along the lines of, facts tell, but emotions sell. And so you're doing totally different things, which kind of dovetails into this next question, which are the values of old homes that need renovation to live in prevalent or scarce? So I'm not exactly sure what that means. Yes, dollar per square foot, Tony, correct. But ℊ𝕠𝕟𝕟𝕼, I don't really know what your question is talking about.
Can you clarify?
Are you saying, are there enough undervalued, under-renovated homes? Like, is there enough meat on the bone left in any given market?
I mean, there's a ton of houses that would be good houses to flip. It's just, the matter of finding those houses. They mostly off market, and finding those off market properties, connecting directly with the seller. That's the key. But it can be hard. A lot of the sellers are either deceased, or they don't want to deal with it, or they're older. And some of these older people, baby boomers, some of them want to hold on to their properties. Like I'm never gonna sell. I don't know what they plan to do with that, like take it with them to when they die, but it can be hard here.
So
a lot of them.
Right. So T's question, are they priced in good ranges? This is an interesting question, right? This takes us back into 2 things. One is, you make your money when you buy. If you were able to buy it for $1, right, as an extreme example, then you'd really have to screw it up to not be profitable, right? But then what is a good price range? If you own a drywalling company, or if you own an electrical company or something, if you can reduce the costs in some major expensive thing, then you have a competitive advantage and you can compete in price ranges that other people can't. And this all ties back into building your team. And if I could do a shameless plug here, every month we have a thing called AVL Meetup, where we bring the movers and shakers into one room. We had a head count of 134 last month, the month before about 200. And it's all those people. If you have a good team, then you can compete in price ranges that other people can't, because of market efficiencies and relationships and all sorts of stuff. If you have a great agent like Elena looking for you, you'll hear about things before anyone else gets there. That is almost more important than the price range, honestly, right? So, hey, avlmeetup.com. That's right. Our next one's on local growth story. It's small city startups doing big things, I think, is the tagline. But that's it. It's, where's your competitive advantage? If you have all the time in the world and you can float this and you do the work on your own at night, then your price is great, but it boils down into that.
But a lot of people, unless they are flippers themselves or handy, which there's not a lot of people like that, there are a lot of people who are looking for flipped homes. If not new homes, they want flipped homes, because some people want new homes, brand new home. They just want a brand new home or newer home. Some people want those homes with character, but they don't necessarily want to do all the work. They want something already done for them. So there's a lot of market, because a lot of these homes with character, that's been flipped and are move-in ready, they are located in those more desirable locations, that are developed. They are maybe in walking distance to things like downtown, West Asheville, River Art District, and some other town centers. So that, yes, it's just a matter of finding a good deal. And if it's in MLS, that's too late. That's not a good deal. And then, like Zach said, finding a good crew, or if you can do a lot of things yourself, that's gonna cut a lot of your costs down, and you're gonna be able to make more money and price it better, and not have to chase and try to make up all your profits.
And another shameless plug, but it's just the reality. The odds that Elena knows about a home coming on the market before you do, very high. So having an important person on your team is your realtor. I'll just say that.
Right. I mean, yeah, that's true. And we helped a lot of clients who were looking, couldn't find anything. We found them off-market properties. Want to be an alternative to CREA? If so, can you discuss? It's not an alternative to CREA. CREA, I think I'm saying it right, but it has a different vibe, and it has different purpose, I would say, right, Zach?
Sure, yeah, like if you think of economic theory, right? You've got complements and what is it? The other one, something with an S. I just totally blanked, right? Substitutes, complements and substitutes, right? So it's not a substitute in any way, shape, or form. Everyone should be going to both of those events if you're taking real estate seriously. One of the main differences is that we have literally nothing for sale and it is for free. You come, we have a panel of 3 of the top speakers that we could get a hold of in the area, period. Like last month, we had the CEO of ℍ𝕀𝕊 and the CEO of Burial Beer Company. Like we have very high profile people. It's kind of like a live podcast, and you're the studio audience that just gets to pick their brains and ask questions. And then it opens with a market report. So we do everything we can, from check-in surveys to matchmaking surveys and everything, to just connect everyone in the room. We are not involved in any of the deals that happen. And it's just a community building, really cool thing, essentially. CREA, on the other hand, has a membership and paid events and everything. And if you're going down the more traditional route, do that. But it would be a disservice to not go to both, in my opinion, if you're taking this seriously.
Yeah, it's just what your focus is right now. Okay, so I just wanted to wrap this up. If anybody has any questions, put them in the comments. But I just wanted to mention real quick. We talked a lot about numbers, right? And what the market is doing, what's happening, the projections and all that. So what does it mean to you? If you are, let's say, a seller, what does it mean to you as a seller? Well, it depends. It depends on when you bought it. I see a lot of homes that come back on the market. Yes, believe it or not, some people do resell the houses a year, 2 years from when they bought it, and they some of them bought with cash, but some of them, did not. And most of them they are not primary residences. They are those failed or less than successful short-term rentals that they bought, and they, for whatever reason, they realized they made a mistake, and they're trying to sell them now. And I see a lot of price reductions, and these people are not able to gain any value, because they were not able to gain any value, so they're not going to have any profit, and I feel just so bad for them. So for these people who bought in that very short period of time, a year or 2 years ago, that's not a good market to sell. But if you bought a house 5, 10 years ago, you're sitting on a lot of equity. It's just a question of whether or not you're going to turn it into a cash purchase next, or what are you going to do with with interest rates. So for buyers, and if you were to look at the buyer side, it is, I mean, I hate to say or sound like that, because the interest rates, right? They're killing a lot of deals, and people are sitting on the fences. But it is a great time to buy a house right now, because you can actually get a deal. And it might not sound like a deal to you looking at all the prices, but here in Asheville, that's a deal. You don't compete with a bunch of 10 or 20 other buyers. You are able a lot of times to cut down the price if the house been sitting there for long enough. I mean, I showed a house that had a $250,000 price reduction, and they just recently reduced it again by $75,000. I mean, that house was in the million, a little over $1 million, but still. So as a buyer, it is a great time to buy. And what a lot of buyers are hoping for, and that what a lot of lenders are telling them and kind of coaching them on, is that you buy now and then you refinance later when interest rates drop, when or if. Also, keep in mind, you need to be able to refinance. It's not just because interest rates drop, you're going to refinance. You need to make sure that your income, your financial situation is still the same. You still have the same job, which is huge. A lot of people don't realize, but you need to be having 2 year, you need to show proof of income for 2 years from the same industry. So if you decide to switch jobs and go into a completely different industry, game over. You might not be able to refinance. So consider all those things. But it is, looking at the numbers, it is a great time to buy right now. Questions, comments? If you disagree with anything, put it in the comments. Again, you can catch this replay on my channel. It's going to live there. If you came in late, if you have any questions, you can put them in the comments now or later when it's going to be posted on my channel. And I posted a couple of links. I'm going to put them also in the description. Ruiz report and AVL Meetup. Anybody, it's free. You can come check out, meet people, talk about the market, what's going on, what you see, what other people see, not just what I say and what Zach says, although it is all based, it's a scientific approach, basically. It's all based on numbers, not what you think or somebody said. All right. Thank you.
Awesome. Thanks, everyone.
Thank you, Zach, for spending your evening with us. I think it was a great session. And yes, you're welcome. Come back again next week. I'm going to talk about something else on another live. And I'm sorry it took a little longer. I promised Zach it will be 30 minutes, but it's going on 40 minutes.
We'll live. It's a fun topic.
It's a fun topic, right? Talking numbers, coming from a numbers guy. But we appreciate everyone. And we'll see you. We'll catch you on the next live and on the next video on this channel. Reach out if you have any questions or if you need help relocating to the Asheville area or buy or sell here in the Asheville area. Bye for now.
Thanks, everyone.